The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good, Lewis. Welcome to the first day of February, the day before Groundhog Day. Also, remember, folks, we have a super new moon coming up here. The moon is going to be at apogee here on the 3rd of February, which is Super Bowl day. And as Mr. Winsky from Astro Trend said, that the stars are in the house for the Rams to win, whatever that means. He's been right 4 years in a row, so probability is with him, so we'll have to pay attention to that. Folks, we have something very big happening today, and it is in the bond market. Yesterday, we had a perfect 61% retracement up there at that 147 level. That means a great deal. We're now about a half a handle under that, so pay close attention to that. In addition, if you'll remember, one of the things that we were looking for this week was to see the E-mini S&P get up to this 2710 level. The high yesterday was 2712, which is trading around 2708 today. And the NASDAQ is lagging a little, well, it's actually lagging quite a bit. It didn't even make a new high on that last run. It just went up and matched the old one. So it's near the 78% level. So that's it. I think the most important thing that's going on as we come into this new moon with apogee here on the 3rd is the fact of the longer-term chart for the interest rates in Germany. Now, I know we're not German, but we want to follow what they're doing. If you remember here, we were looking at this long-term weekly Gartley. If you'll take a look at this, you'll see that it's up around that 160, near that 160, almost at 166 level. That's the ABCD. This is a long-term chart, folks, going over the last 4 years. So it's a very, very important indicator of interest rates, and that means that the rate should start to go higher and not lower. But that's the opinion of the charts that we're looking at. One of the things that we're looking at here is if we take a look at the comparison here, and we'll get this up here, you'll be able to see it pretty quickly. If you take a look at the comparison between our 30-year bond and what's happening with the German bond, you'll see that the German bond went up yesterday and made a slightly higher high. That basically completed that long-term weekly number because it was still off by about 2 pips, and it went and did it. It's down a little bit this morning, as are our bonds a little bit, but it's still a little bit early. But the pattern is there, and as we know, sometimes they fail. That's what happens with everything that we do. So that's it. One of the things, before we move on to the next chart, we had a question for one of our listeners across the pond about the 4 fears that Mark Douglas talked about that prevents us from, doing the right things almost all the time. The first one is the fear of being wrong. Folks, you're going to be wrong all the time, so scratch that one off. If you think you can be perfect all the time, forget about it. The second fear is the fear of losing money. That's the one that's difficult for most people because when you're trading with speculation, you do have to risk, but you have control over it. You can stop it at any time, but that's one of the key fears also. The other one is the fear of missing out. That should be an easy one. It's much better to be out of a market wishing you were in than in a market wishing you were out. Think of the people that have been long natural gas here during this really cold spell over the past 2 weeks, and we had great fundamentals, and you saw what happened there. And finally is the fear of leaving money on the table. This is really as silly as the first one, which is the fear of being wrong. The fear of leaving money on the table, if you look at this really closely, it basically means that you're expecting to get the high tick or the low tick when you exit your positions. That just doesn't happen very often. So those things, when you accumulate them all together, along with their cousins and uncles of the fear group, this is a problem that you have to have, and you have to work through that. And the only way you can do it is by using baby steps. This doesn't go away overnight, not a chance. So that's the main thing that you have to remember is these fears are there. Face them, look at them in the mirror, laugh at them, have fun with them, but they're there. You just have to, work around them. That's all there is to it. You're going to be wrong a lot. I always say on this program, you got to kiss a lot of frogs before you find a princess, and that's true in trading too. So pay very, very close attention to those fears because they're there, and you just have to deal with them. That's basically the bottom line of what we're watching here. Thank you very much, Mr. Z, for posting those in the room. That's great. Fact is that we get to see Mark's wife. She'll be here in Tucson. We'll be able to say hi to her this weekend, which is fun. And let's take a look here from one of our charts from our good friend Rich Anderson. He was kind enough to forward this because it's about corporate earnings. I don't really follow these kinds of things, but Rich does, and his daughter is an attorney, and she trades, but she follows these quite a bit. But you'll notice that the earnings peaks happen long before the stock market peaks. And you can see here that if you look at those earning peaks and you look at it as a 3 drive to a top pattern, we are certainly doing that. And we've already seen what the equity chart looks like. So we'll have to go beyond, looking what these things are going to do and see what the price of the stocks are going to do. So that's something that we want to do. Remember now, that pattern that we've been watching in the E-mini S&P has now been completed. I'll put this up here so that you folks can take a look at it. This is the one we were looking at on Friday, last Friday. You were looking for this resistance to come in at 2710 was the exact 61% retracement and the 78% retracement. Yesterday we hit 2712. We went down about 10 handles, nothing there at all, and then we were able to rally back. If we close above 2720 today, folks, I will assume we're probably going to go higher. That would be my guess. But as it looks right now, we should be under some strong resistance in this area. We're seeing the same thing in the NASDAQ. And we're also seeing the same thing in the Treasury, in the Dow Jones Industrial Average. The Dow is actually, one of the weaker ones. Now, remember, when you see Dow move 100 points at one time, that's because there's a big stock out there like Boeing or United Healthcare or Goldman Sachs that is making the market move. And that is not. When did we hit 2713? I thought the high was 2712. Did I miss that? All right, we'll get that. I want to cover another one that's very important. The Russell did not do nearly as well. I saw that after hours, but I only saw 2712. Wow. Huh. Well, I'll be darned. We'll have to wait and see what's going on with that. That was a very big surprise. I'll have that checked by the time we get back from the break. I certainly want to take a look at that because it's a very important thing to look at. We also need to look at that gold market, folks, because we're at a very critical level up here, and we'll walk through that as we go through. We'll also cover, some more of the British pound, and the Canadian dollar just keeps moving, in the direction that we thought it was going to, which is good. And then we'll look on the crude oil, what's going on there, because crude oil had something relatively important happen yesterday also. So 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I posted the chart of the gold over the last 5 days. You'll notice that each time that gold has sold off, it has made a perfect 38.2% retracement of the previous lows. We've gone through 3 of these repetitions, and that's what we're looking at. Let's take this one step forward and see what we're looking at for today. We'll get this up here because, did that one wrong. Shut the front door and raise the rent. All right, all I got to do now is to find it, and I hope this is it. No, that's not it. Well, we're going to have to redo that one. Not going to worry too much about it, but that's neither here nor there. What happened to it? Oh, dear. You know, by the way, those of you that, when you hear that shut the front door and raise the rent, that comes from the movie Blazing Saddles, which was Elvis Presley's favorite movie. It was said by Cleavon Little to Gene Wilder. Anyway, let's move on here to the next one that we want to look at, and that is this Canadian dollar, because we're really starting to accelerate to the downside here. We had a small 382 retracement up at that 133.60 level. We've now broken down decisively below the 132 level. We're trading around 131 and change, almost ready to break 130. Our price objective on this is around 128, so it still has more to go. This has a very, very bearish long-term chart, and that's what we're looking at. And it's been the easier one to trade as opposed to the euro and the yen. And the pound has been very good also. But the pound is getting very, very close to some very interesting spots here also. Because if you look here at this British pound, and we will look at this British pound because we're getting ready for all the stuff every day. And okay, yeah, today they wouldn't even be able to make Blazing Saddles just because of all of the slurs that were in there for everybody. They had something for everybody in that movie. But anyway, let's move on here and take a look at this British pound. You'll notice in the British pound, that bottom that we made there, that was a perfect ABCD 78% retracement on the long-term weekly chart. Going back about 5 years. We had a really strong rally. We rallied just about 8 handles, and now we're backing off a little bit. We're almost at the 382 of the low that we made back in early mid-January. So that should be a really important support here at 130.20 in the British pound. We're trading at around 130.50 right now, I believe. So it's very, very close. So we need to watch that. Now, we are seeing divergences, folks, between what's going on with the U.S. dollar and some of the others, because we're having really strong strength in the Canadian versus the U.S. dollar, and also the Australian dollar. And if we look at the British pound, even it's had a pretty good move. It's only the euro, which is 53% of the dollar index, that's been causing a problem. And even then, we stopped at really strong 78.6% retracement yesterday down there at that 114.30 level. We've rallied up to 114.70 so far this morning. So these are ones that look really interesting, to say here. Now, I did mention, I'm sure I did, Tim Bost of Financial Cycles Weekly will be our guest at the break. He's the one that gave us this last hold on one second here. I'll put this up here. And, we got a caller from Michigan. John, are you there?
Hey, good morning, Larry. Love your show. Try to listen to you every day.
Thank you very much. What can I do for you, my friend?
I have a question for you. Now, full disclosure, you've forgotten more things than I'll ever know about trading. And I had a question about gold. I want to say that about a week ago, I was watching a show and you said, I'd like to see the gold go down to about 1220, and that would be a great place to get in. And it shot up. I don't think it ever went down to 1220. It just kept going higher. So when you're looking at a chart, I always have a problem with the time. Mm-hmm. I know you're looking at stuff and you're saying, you put a number out there and you'd like it to go, to that spot. There's got to be an element of timing involved that you know about that I just don't understand. Am I correct there, or?
Well, yes, you are correct. What I try to do, John, is when I see a move like gold, I try to find an entry point that will, allow me to get in without risking too much. I just posted in the room the last 5 days of gold, showing that all of the retracements have been at 38.2% corrections. Now, of those, I was only able to be filled on one. I missed the big one yesterday when the Federal Reserve came in. It went right down to the 382 and rallied strongly. So what I try to do is I have a macro view of what I think the gold is going to do. Then I go down to usually a 4-hour chart, and then I look at the past, to see what's happening, and I watch the Fibonacci ratios on the downside, and then I go to the hourly and then either the 30-minute or 15-minute. So I'm watching all of those, but I don't do all of those on everything. Only when I'm ready to trade. Like today in the S&P and the bonds, these are two of the big ones that I'm watching. That's what I'll do. I'll go down to the fine-tune it all the way down to 15 minutes so that I have a spot where I don't have to risk very much. Now, if you're doing a daily chart, that's not going to make a whole lot of difference, but you're going to have to risk more because you're not going to be able to pinpoint an entry, that someone that's watching a shorter-term chart is going to get. And that's really what you try to do as a trader, is to find those, probabilities that are in your favor that you don't have to risk very much. And that's pretty much what I try to do. But you're right. I am looking at something a little differently because I'm looking at it macroscopically, and then I'm also looking at it microscopically as I go into the 1-hour charts and the 30-minute charts. That's what I post in the 24/7 service that we have for TFNN. I send out videos and emails picking those spots. Like yesterday, the spot in the crude oil was at 55.30. That was a 382 retracement on the long-term weekly. It broke $2 a barrel from that. So that's what I try to do, is to fine-tune it. That's really what it is.
Well, that makes a lot of sense. And, you've said that many times. Sometimes it just takes a lot. I have to hear it a lot to have it sink in,
Repetition is the mother of knowledge, my friend. I do it all the time. That's for sure.
You know the story. Believe me. So I really appreciate your show, and I hope you're going to be around for many years to come.
Question. How cold is it in Michigan?
Well, when I got up to go to work this morning, it was 7 below. Now, you ready for this? They're telling me tomorrow it's going to be 40, and then Sunday it's going to go to 50. That's 50. That's 50 degrees, not 50 below.
Wow.
So they're telling everybody now, get the snow away from the side of your house because you don't want your basements flooded, you know.
Oh, boy.
We got about 8 inches of snow on the ground here. Past one. Yeah, I think it was this past Monday. Okay. So it's piled up pretty good around because it's been so cold here.
Yeah. Well, listen, thank you for calling in. Happy New Year to you, and we'll talk to you again someday. Thanks for calling in.
Thank you. Bye-bye.
You bet. Okay, I think we're ready for a break, but I'm not sure. I don't hear the music, so let's get ready to move on to the other one. Let's take a look at the longer-term gold chart since we have had John on the air. You'll see here that we've broken out to the upside, and all we're doing now is looking at a little bit shorter time frame this morning to see what the correction was, and that's exactly what we had. Again, we had another $9 correction. They've all been $7, $8, or $9 over the last 5 days. Stay tuned for Tim Bost.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Tim Bost of Financial Cycles Weekly down in Florida. Tim, how are you doing?
I'm wonderful, Larry. Happy Groundhog Day Eve to you.
Yes, and then we got the Chinese New Year coming up pretty soon, too.
Absolutely.
Hey, Tim, the last time we had you on last month, you gave us a little chart that I posted it into the den because I saved it because it's been so spot on. about showing that what the short-term moves in the market was going to be, and it's been really quite good. I'm very impressed. My question that I have for you is that sort of like a modified Bradley model that you're looking at when you do that?
Well, we do look at the Bradley indicator, but we're also tracking other cycle work and especially looking at the overwhelming power of eclipses in all of our cycle work as well, Larry.
Okay. Now, this new moon that's coming up, being at apogee, does that have big significance here on February 3rd?
Well, anytime we have a new moon or a full moon that occurs near apogee or perigee, it has extra significance. Now, when we get to the perigee, that's the closest point to the Earth, and that's a supermoon. But when we get the apogee alignment as well, it adds extra strength to that new moon dynamic. So we're expecting that to help modulate the market a little bit. We're looking for some price consolidation going in through till about this time next week.
Okay. Now, I'll post the chart that you sent to us this morning. I want to get up here so we can take a quick look at it here. Then you can explain to the folks what you're looking at. And how's your weather down in Florida?
We are expecting temperatures in the mid to high 70s today. So
back to normal. Back to normal.
The polar vortex has passed us by, so it's a good thing.
Yeah. Okay. Oh, by the way, that's a question that I have is, does astrology help with anything, like when they talk about global warming or anything like that? Do the planets mean anything related to those?
Actually, Larry, there's a long history of using astrological factors for weather forecasting, especially long-term weather forecasting. But I've not taken a look at how the global warming trend has skewed those astrological methodologies. It would be interesting to take a look at that.
Okay, fine. Why don't you tell us what you're looking at on your trend projections for February through July?
Well, the last time we shared a chart, we were a little bit shorter term in our outlook, and we decided to extend it over about a 6-month period here, starting around now. Actually, this chart was computed last weekend, so we're a few days into the mix with this. But essentially, what we've done is looked at the major astrological events that are coming up, aside from the eclipses, which are really the most dominant factor in determining market trends, to kind of get a secondary picture of where things are headed a little bit longer term. Now, what we're looking at is a potential for a bit of a price pullback, as I said, into around the 7th or 8th of February. We've got a high coming in around the 28th, or excuse me, around the 18th, with Chiron entering Aries at the supermoon. That'll be the full moon coming up on the 19th, and the markets will be reopening then after a holiday break. So we expect that to be a trading top around that time, and then swinging into another low around the 6th of March, when we've got Uranus entering the sign of Taurus. That's an 84-year cycle, so that we don't get to deal with that one too much. And then we're looking generally for an uptrend moving into mid-April, and then a pretty sharp decline into June and July as we move into that next eclipse cycle coming up.
Okay, we have a question from one of our listeners. Do you see anything on the horizon that would suggest a crash type scenario?
Well, I'm looking at that possibility, short term, coming up around mid-February. We've got some high volatility prospects there. I'm not really seeing that as a crash dynamic. However, I think it's much more likely to come in mid-April. When we have that Neptune-Apollon alignment potentially triggering a move downward that could be fairly sharp and fairly extended.
Okay, that makes really good sense. Let's move on to the next one. This is really interesting because you're going to have to explain to the folks, what you're looking at here, because this is I believe it's a transit chart, isn't that correct?
Right. Yeah. This is something we call a graphic ephemeris, and we've superimposed over that a 90-degree dial on the right-hand side of the diagram. Basically, what a graphic ephemeris does is represent on a calendar the positions of the planets on a day-by-day day-to-day basis. And so we project that out in the eighth harmonic, and we can look at the intersection points to predetermine when we're going to get times of extra stress. And so I've circled that date of February 14th as a time when Mars, Neptune, and the trans-Neptunian factor Volcanus come together in a particularly sharp configuration at that time. And so that's what attracted my attention. We calculated the chart for that. The closest alignment will come on Valentine's Day, about 3 hours or so after the market closed, about 4 hours after the close there that evening, which is the diagram on the right.
Will that have any effect on Valentine's Day for couples? With Mars being, because Mars is the planet of war, maybe this will be a bad one. I don't know.
Well, Mars is also the planet of hot sex, so we won't rule that out either. It could be very good for couples.
We'll have to bleep that one out. Hey, Tim, when you're looking at this transit chart, for the folks that don't really follow astrology, they see that circle out there, and you show the 3 signs of the zodiac in there. What is it that you're looking at when you're looking at those 3 signs? What is it that you're trying to look at?
These 3 things are planetary bodies that we are looking at a particular geometric arrangement of, and there's a square, a 90-degree angle between Mars and Neptune at that time, and then an 8th harmonic alignment with the trans-Neptunian factor Volcanus. And so these 3, when they come together, create a picture of extremely high energy. Typically that Mars-Volcanus combination is associated with extreme efforts and sometimes acts of violence, and we can see sharp turns in personalities and negotiations in the markets and so forth. With Neptune added to the mix, what we do is get things that don't pan out as we would hope, and so lots of potential frustration there along the way, wasted energy, so to speak.
Okay, that makes very good sense. Now, the last one is one of our favorite subjects here, and that's Bitcoin. You've got the chart up here. What are you seeing here in Bitcoin, Tim?
Well, we've, of course, seen a huge pullback from our spectacular bubble in December of 2017. And we've been looking at these congested periods of trading where things, follow a trading range, and trying to track some of the planetary influences that seem to have an effect on this. And one of the things that I did was take a look at that extreme high back in December of 2017, and there was a Mercury Volcanus dynamic in play at that particular time. So I've been trying to track those planetary dynamics using these planetary price lines, which provide natural levels of support and resistance for the stock, or for the Bitcoin US dollar pair there. So what we're looking at are the Volcanus lines providing support and resistance currently. We're putting the support in at about 33.05 and resistance at 41.57 with that. So if we get a break above that resistance line at 41.57, we'd be reading that as a very, very bullish signal indeed.
Okay, Tim, we have to take a little break. Could you stay with us for a few more minutes for another segment, for just a short segment?
I'd be delighted to, Larry.
Okay, we'll be right back, folks. Tim Bost, Financial Cycles Weekly, Sarasota, Florida. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and we're with Tim Boss, Financial Cycles Weekly. Tim, I have a question about the Bitcoin, and that is, you wrote a book about that about a year or so ago, didn't you?
Right. This came out last May. It's called Bitcoin Astrology, and it's an anthology of essays by well-known financial astrologers, including Bill Meridian and Christine Skinner and myself and a couple of others who contributed their perspectives on Bitcoin from an astrological angle, and we've come up with some cycles and things to work with there as well. It's available on Amazon.com. The title's Bitcoin Astrology.
Okay, Tim, one other question. I noticed when you post a chart, you're using the Fibonacci Galactic Trader from Jeannie Long. Am I correct on that?
That's correct. Yeah, that's one of our favorite tools for analyzing market trends, especially because it gives us the ability to superimpose some of the planetary dynamics on top of conventional trading charts, so we can combine our technical tools with the astro trading tools as well.
So the program actually shows the astrological aspects that you're looking at, and then you overlay it on the prices that you're looking at.
That's correct. So what's going on here is with that Bitcoin chart, the more or less horizontal lines represent the planetary positions of the Trans-Neptunian Vulcanus, and the more curvy lines coming in from a diagonal there are the positions of the planet Mercury. And what we're looking at are the intersections of those lines, and of course the lines themselves providing support and resistance for the trading action. And so it's a little bit of trial and error that gets us to use these on any given chart, but they prove to be very, very powerful as a confirming factor for other technical indicators.
Well, that's great. Well, listen, we want to thank you for being our guest today. You want to tell the folks how they can reach you if they have an interest?
Absolutely. Send me an email, tim@timbost.com, or check out financialcyclesweekly.com. That's our main website with our newsletter.
Well, and you're also listed very high up in the Timer Digest all the time, so congratulations to you, buddy. That's not an easy thing to do.
Thank you. We try to do our work as well as we can here, so we appreciate the recognition. Thanks so much.
Thank you for joining us, Tim. We'll have you on again soon, but really enjoy the work. It's very, very informative. Thank you so much.
Thank you, Larry. Always a pleasure to be with you. Take care.
Okay. You bet. Thank you. That was Tim Boss, Financial Cycles Weekly, and we want to take a quick look at one of the markets that we've been watching very, very closely. Just take a look here, folks. This natural gas it has been screaming that something's going to happen to be a break in the weather. But look at this. We've got a potential major double bottom down here between January and February. It's going to be very, very interesting here because with the weather breaking, this would be the time where the shorts should really be in control, and that's usually when they get surprised quite a bit. So we want to keep an eye on that one because it's got a possibility of making some very, very interesting movements here because it moves $4,000 and $5,000 at a time. So we want to watch it very, very closely. Here's the chart that we're following here for our folks here at TFNN. This is the shorter term hourly chart. You can see that large ABCD pattern coming here. The double bottom is right in place right now at 2.77. So that's going to be interesting. It's a 3-drive pattern. So we'll be watching this one for potential long entry without risking very, very much. I mean, you certainly couldn't buy it, anywhere during the month of January because it lower tops, lower bottoms, screaming to the downside. And then when the good news came of the deep freeze, the market just couldn't rally, and now it's paying the price of those that tried to stay with it. But as the fellow from Michigan, John, that called in, basically was looking at about a 60-degree temperature switch from -7 up to 60 degrees. So that's a big move. Help maybe melt some of that snow and ice that they have, back in that area. Okay. Oh, tomorrow is Groundhog Day. That's right. Puxatawny Phil will be out looking for his shadow. Well, there's a people that made a really good move, marketing-wise. I don't think I don't know. Does anybody ever kept statistics on whether that groundhog really knows what it's doing? It's got to be a DNA groundhog because it's been around for so many years. Oh, 39% accurate. That's very good. That's just slightly less than a towing cost. Thanks, Mark P. I appreciate that. That's anyway, it made a great movie with Bill Murray, Groundhog Day. That is really a great movie. I really enjoyed that. So it's going to be very interesting to see what looks like. Like your stock picks? Well, look, you don't have to be right on stock picks very often, folks. So keep in mind that that's what we're watching. Let's just take a quick look. We got this from the other day when we had our friend, Mr. Norm Winsky, on. We were talking about the January effect. We want to review that one more time here. Basically, the January 31st, yesterday's closing price was an up January. The Russell was up 11% year to date. The NASDAQ 9.7%. The S&P almost 8%. And the Dow Jones 7.2%. That's 1 month, guys. Because when we bought them back there on December 26th, we hit the mother of all support. That's the one that you've got to really pay attention to because this is going to mean a lot. I can say that with 150% confidence that low down there at 10,700 in the New York Stock Exchange Index, you have to pay very, very close attention to that, as we do with the banking index and also, the Dow Jones and the NASDAQ. All of them hit major numbers. And if we close above 2720 today, it looks like we'll probably go up a little bit. We're very, very overbought. The NASDAQ is lagging behind today mainly because of the news with Amazon. It wasn't bearish, but the market was not as bullish as the market wanted it to be, so people sell off, so we'll see. Okay, Peak is asking a question about the gold, the correction coming. It's still a little bit early on the gold, but, we got to be very, very careful here. Let's just bring this up here. This is the April gold now. This is something that we need to watch. You'll see here that we did get down to 1322. We went a little below the 382 retracement. We're now trading up around the 61% retracement at 1328. We could have one more rally. Now remember the ABCD structure on this takes you to 1339. And we've only been to 1331, so we could go up another $9 just to make the larger ABCD pattern. So that's a perfect example of what John from Michigan asked about. If you're looking at a 15-minute chart and you transpose that over a daily, you have to be very, very careful because if you're trading a 15-minute chart, that's what you should be trading. Don't quickly go to a daily, weekly, or monthly, trade off the chart, the chart that you're looking at. Like Yogi said, dance to the girl you took to the dance, so pay attention to that. These shorter term patterns, look at this chart on April Gold, folks, over the last 5 days. Every single correction was exactly equal except for today, and today it went $2 lower. So, and it was a buy there. And look what's happened. It's had a pretty good rally from that level. So pay attention to that. You have covered the 10 and 30-year bonds. I did cover it early, Ruby, but I'll do it at the end of the break here. I will be happy to pull up the 10-year notes and the 10-year bonds. I did the bonds already, but I'm going to do it again because we're at a real critical level yesterday. We hit the 61% retracement at 147, and we'll bring those up after we have our last break here that we have coming up in just a few minutes. That's the key to be watching here. So we'll be right back, folks. 877-927-6648.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, if you called in and we don't have time, try to call in tomorrow if you can. I'm sorry we come up with the very latest part of the day, which is really quite condensed, I guess. Anyway, I posted the chart for the Treasury bonds. You can see that it made the 61% retracement up at the 147 level. The high was 147.01. We're now trading at 146.14. That was a perfect 61% retracement. We saw the same thing in the Treasury notes. You know, that's what we're watching here, so keep a close eye on it. Folks, on the natural gas, we've taken out the lows of December by about 60 cents. We're now about a couple bucks above that. That's very important because that told you that there are not many stops there. So if you're short natural gas, be really careful because it didn't go down with the breaking new lows. Usually they cascade through there, but pay close attention to that. That because of that 3 drive to a bottom of the natural gas, that might mean something that could be very, very important. Another question about the gold, folks. The gold stopped right where it should have, up to the April gold at 13.28. We're trading at 13.26. If we get above 13.30, we'll be looking at 13.39 to 13.40. Other than that, I believe we're ready for a correction. We're 8 days up. And that usually is an outlier event, but not always. So, pay close attention to that. And finally, the S&P 500, if we close below 2720, we are going to go higher. If we go sharply lower today, the Fibonacci level at that 2710 that we hit last night is very important. We're trading at 2703 right now, which isn't very much off the high, but it's showing some type of a little bit of selling early in the morning, if nothing else. So those are a few things that we want to watch. If you're in that Canadian dollar trade, just hang on, buckle up. It looks like it's got at least another 200 pips in it, and we'll have to do one thing at a time. And there'll be a really big review of the U.S. dollar index in this week's newsletter, that if you want to be interested in that, 24/7, we certainly have that for you. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.